SCHD is dropping like a rock. Ditch it. Go for something else. And these are some of the calls that you'll see on social media lately. SCHD indeed declined by about 10% of its recent peak. In this video, let's take a look at the real reasons why SCHD went down and what it means for investors like you and me. First, I want to point out one important thing. This drop happened over the course of roughly 3 weeks from top to bottom. Guys, it means nothing. If you bought SCHD before, you know that markets fluctuate, and these 1, 3 or even 6 month gyrations can disappear in a matter of 1, 2 or more years. In fact, the longer your holding time horizon, the more this downturn will look like a speckle of dust on the SCHD chart. Just over the past year, SCHD appreciated by about 7%, at a dividend yield of about 3.5%, and you have over 10% total return. Stable dividend ETFs typically show a total return of about 10% per year. Unlike individual stocks, dividend ETFs rarely appreciate by 20% or more in a given year. It's rather an exception than a rule. So while this 10% correction is definitely disappointing, it is best to look at it with long-term performance in mind. Some YouTubers pointed out that SCHD is down because treasury rates are high and will stay high. The logic goes like this. If the interest rate is up, people tend to avoid dividend stocks since they can get a better yield elsewhere. I'm not sure I agree with this premise. There is some weak negative correlation between dividend stocks and treasury yield. Looking at SCHD versus 10-year treasury yield chart, we see that the relationship is haphazard and it doesn't always hold. There are many other factors that affect SCHD's price behavior. Interest rate is not on the top of the list. Another unlikely reason behind SCHD decline is that people are dumping value stocks and going for hot AI stocks. Well, I don't think that's a real reason either. I mean, true, AI and other growth stocks have been in demand for the past several years. Could it be that all of a sudden this affected SCHD this past month? Well, I don't think it's likely. Most of the time, there are fundamental reasons why any given ETF goes down. In the case of SCHD, we should look at its portfolio for the answers. The first real reason has to do with SCHD's exposure to healthcare stocks at about 17%. Healthcare stocks tanked in the past several months big time. The market thinks that Republican wins do not bode well for the healthcare sector. If we look at ETFs tracking healthcare such as IYH, it was on a downhill trajectory. The second reason behind SCHD decline has to do with its financial stock holdings. SCHD owns many regional banks. They were down due to uncertainty around interest rates. You probably know that the Fed lowered its interest rate by 25 basis points in December. At this time, the federal funds rate range stands at 4.25 to 4.5%, but the inflation expectations changed for the worse. The market expects higher prices going forward. This led to steepening of the yield curve in December. The yield curve shows interest rates at a given time by maturity date. We see on this chart that the interest rates on long-term treasury bonds went up since November. This is typically bad news for banks that hold treasury securities. When this happens, their bond holdings tend to go down in value and generate losses for the banks. The third reason is that SCHD has a material exposure to energy stocks at about 12% of its portfolio, and many of its stocks in its portfolio went down in December for reasons that were specific to each company. For instance, Chevron went down by about 10% in December because there is some uncertainty surrounding its merger with Hess. And other stocks in oil and gas industry in SCHD's portfolio also went down by more than 10% in December alone, for reasons that were idiosyncratic to each company. As you may know, SCHD does not hold many growth stocks, especially the Magnificent 7. The Mag 7 grew by almost 10% in December on the back of the Trump rally. So, because S&P 500 has a material exposure to these stocks, it outperformed SCHD by a large margin. This is not surprising. Long-time investors of SCHD know this. So, should we dump SCHD just because it's 10% off its recent peak? Is more downside on the horizon? To answer these questions, let's put things in their perspective. Here's the beauty of SCHD. It is a passive fund, meaning it doesn't engage in any active trading or security selection. And this is one of the crucial factors behind the fund's strong long-term track record. As you may know, SCHD's primary focus is the quality and sustainability of its dividends. The fund applies many filters and ranks stocks based on certain financial metrics. Among them are free cash flow to debt, return on equity, dividend yield, and dividend growth rate. This allows SCHD to identify stocks with a wide economic moat and strong returns. Often SCHD's stock holdings have rock-solid balance sheets with consistent dividend growth. Next, let's take a look at the so-called yield on cost chart. The rest of the information you see here will be coming from Seeking Alpha. I partner up with them and there are affiliate links down below. It's a great tool to research ETFs and stocks, so check it out. Yield on cost chart shows how your yield would change if you invested at a certain time. For instance, an investor who put his money in SCHD in 2011 would have initially got a yield of 3.6%, but SCHD's dividends have grown big time since 2011. The yield today for this investor stands at roughly 12% on his initial investment. That's more than 3 times growth over the course of 12 or 13 years. Also, SCHD shows a better ability to withstand market downturns with smaller drawdowns. In other words, SCHD's portfolio is defensive in nature, with a focus on dividends, value, and safety. So again, should we be concerned with this recent 10% decline? Is it a problem long-term for SCHD? Of course, it will be for each of us to decide, but my take is that it's probably a temporary hiccup. A 10% decline for a single stock is a huge risk and a big deal, but for a diversified ETF with 100 stocks in its holdings, it's a non-issue. SCHD weighs its holdings based on market capitalization. So as soon as a single stock starts to underperform, its market cap starts to shrink, right? As this happens, its allocation in SCHD's portfolio goes down. If things turn for worse, the fund may drop completely this stock. In other words, funds like SCHD reward winners and punish losers. And this is exactly what dividend investors should see in a given ETF. If you want to know more about SCHD and how it constructs its portfolio in details, check out my other video linked here. And that'll be it for this video, guys. Thank you so much for watching. Please subscribe to my channel for more actionable content on investing and ETFs. All the best!